have created. Hope EMA helps.
Environmental Management Accounting, or EMA. Let's forget about the definition for the time being. In simple words, environmental management accounting is all about protecting the environment, and simultaneously you can increase your profit also. So we will see how this is done. There are basically 4 methods under EMA, and it is known as the EMA techniques. So let's get to the first method, or the first EMA technique, the input output analysis. It is also known as mass balance. The basis is inputs will always be equal to outputs. Now we will do an input-output analysis of an imaginary product so that we can decide on the quantity of raw materials, water, and energy which is required for making it. Now, in input-output analysis, you have an input column and an output column, and then you have a quantity column on both sides and a rupees column on both sides. So, in the input side, you have the raw materials, including the packing materials for these concentration pills. And then another input that you need in the production process is water. And then the energy that you're taking is you're using the LPG cylinders in your house, that is liquefied petroleum gas, to boil all the ingredients to make these pills. So this is how your input-output analysis appears. So the raw materials that you have used is 100 kg and the total cost comes to 1000 rupees, and you've used 10 liters of water. 10 liters or 10 kg, because 1 liter of water is equal to 1 kg of water. That is why it is written 10 liters or 10 kg of water. And water is not very expensive, so we will take a negligible amount, 10 rupees. LPG, along with the oxygen that is taken from the atmosphere for burning the LPG, it's approximately 10 kg, because LPG, as you all know, needs oxygen to burn. And the proportionate cost of an LPG cylinder is taken as 500 rupees. Now, the total of the input quantity is 120 kg and the total of the rupees amount is 1510 rupees. Now coming to the output side. Out of a total of 100 kg of raw materials that has been used, approximately 10% is the normal loss. So 100 into 10%, 10 kg has gone as scrap or waste, and the balance 90 kg is the good output. That is the good pills that you have produced. So 10% of the cost, that is 1000 into 10%, 100 has gone to waste, and 1000 into 90%, 900 rupees is the cost of the good output. Now coming to the water, 10 kg of water has been used. Now water is not entering into this final product. So whenever water does not enter into the final product, it is always taken as wastewater. Examples of products where water enters into the final product is bottled water or say canned juice. In all these cases, water is entering into the final product. But for all the other products, water ends up as waste water. So the cost of 10 rupees is coming in the rupee column also. Now coming to LPG. Now LPG also, it does not enter into the final product. Majority of the emission is carbon dioxide. So 10 kg, which has come as input, will come as 10 kg as the waste, because it is not entering into the final product. And what is the cost attributable to it? It is again 500 rupees. So whatever is coming in is going out, either as a good product or as waste. So let's make a note of what we just did. Material inputs are balanced with outputs. See, the input and the output column is perfectly balanced. Basis is what comes in must go out. So whatever is coming in the input column will appear in the output column as well. Now, inputs are raw materials, including the packing materials, water, and energy. So here we have the raw materials, including the packing materials, water, and energy. And output is the finished product and the waste. Now look at this input-output statement. It is very easy for us to know what is a wastage. See, 10 kg has gone as scrap or waste, and wastewater is 10 liters, and the carbon dioxide emission is 10 kg. Now, how can you reduce this waste and thereby attain cost savings for the company? So waste is reduced by recycling the waste. So in the case of scrap or waste or the wastewater, you can either try to reduce the quantity of wastage by monitoring the production process again, or you could recycle the waste. You could recycle the scrap and use it again, or you could recycle the wastewater and use it again. So this leads to cost savings because you're not buying fresh water from outside, or you're not buying fresh raw materials from outside, which will be much more expensive. And what is the second method? By substituting the inputs by recycled or renewable materials. Now, in this case, LPG, which is causing the carbon dioxide emission, is a non-renewable resource. Now, always remember that the carbon dioxide emission from non-renewable sources of energy like LPG, coal, is really high compared to the renewable sources of energy. So what are the renewable sources of energy? Renewable sources of energy are biogas. What is biogas? That is produced from plant waste and animal waste like cow dung. Or renewable source of energy is the solar energy. Then the carbon dioxide emission will be drastically reduced. So the option is to shift to biogas, which is a renewable source of energy. Okay, so let's see what Nike has done. Nike is using recycled polyester as a raw material, and that too, which is recovered from these plastic waste. So it's a case of substituting the inputs by recycled materials. Now, whenever we use recycled materials as an input, it is cheaper than the virgin materials, and definitely it protects the environment also, because that much of plastic is being taken out of the environment. And regarding the packing materials, it has increased the recycled paper content in the packing material. Recycled paper consumes much lesser energy than the virgin wood pulp, which means that the carbon dioxide emission will reduce. And they have started to use renewable wind energy also. And as for the wastewater, they are doing wastewater recycling, again saving the environment and saving the cost for the company. So that's it about input-output analysis. We will move on to the next EMA technique, flow cost accounting. Now, after studying input-output analysis, when you start off with flow cost accounting, it is like watching the second part of a movie, because the first part of flow cost accounting is input-output analysis itself. So I have copied the input-output analysis that we had done into the flow cost accounting method. And the explanation is also the same. Material inputs are balanced with outputs. Inputs are raw materials, including packing materials, water, and energy. Now here, out of the total 100 kg, 90 kg is a good output and 10 kg is a bad output. Now the bad output, that is the scrap or the waste, is known by the name non-product output, and the good output is known by the name product output. So we are just substituting those words in its place. Now we will go to step 2 of flow cost accounting. So the output in flow cost accounting is divided between the product output and the non-product output. So if you see here, out of the 100 kg, 90 kg is a good output and 10 kg is a bad output. That is 90% is a good output and 10% is the bad output. So that is what is written here. 90% is the product output or the good output and 10% is the bad output. Now, if you see here, the total material cost that we have incurred is 1,510 rupees. Now, 1,510 rupees was incurred for both the good output, that is 90 kg, and the bad output 10 kg. So in flow cost accounting, they divide the total material cost between the good output and the bad output. So the material cost total is 1,510. 1,510 into 10% is 151. And 1,510 into 90% is 1,359. So the material cost has been divided between the good output and the bad output. Now, in the manufacturing process, it is not only materials that is required. Other manufacturing costs are referred to as the system cost. Now, system cost can be defined as any expenses incurred for the in-house handling of the materials. It is within the factory what all expenses you incur for manufacturing these products. Example, the personal cost, that is the expenses incurred for the direct laborers, supervisors, etc., equipment depreciation, any internal transportation costs, that is if you're transporting from the warehouse to the production plant, all these come under system cost. Say the total system cost is 1,000 rupees. So this 1,000 rupees has been incurred for the good output and the bad output also, right? So here again, we will divide the system cost between the good output and the bad output. So 90% will go to the product output. So 1,000 into 90%, 900 will go to the product output, and 10% of 1,000 or 100 rupees will go to the non-product output. So the system cost has also been allocated between the good output and the bad output. Now the last type of expenses are known as the disposal cost. Now this non-product output is the scrap and the waste, or there is a waste disposal cost associated with the non-product output. The waste disposal cost relating to this non-product output is say 200 rupees. Now please note that waste disposal cost will not come for the good output, because good output we are ultimately selling to the customers. So the total disposal cost is also 200 rupees. Now it is time to find out the total cost attributable to the product output and the total cost attributable to the non-product output. So for the product output is 1,359 plus 900 plus 0, which is equal to 2,259 rupees. And for the non-product output, it is 151 plus 100 plus 200, giving an amount of 451 rupees. And the grand total is 2,710 rupees. So what are they doing in flow cost accounting? They are trying to find out the cost which is attributable to the non-product output. Now, when companies started adopting the flow cost accounting, they were in for a shock, because earlier they thought that the cost attributable to the non-product output under the input-output method was only 100 rupees. But now they realized that the cost attributable to the non-product output is 4 times, 451 rupees, because this non-product output also passes through the production process, right? So it is not only the material cost that should be associated with the non-product output, all the manufacturing cost and the associated waste disposal cost should also be added to the material cost to find out the total cost of producing the waste or the non-product output. Definitely, it was an eye-opener for the companies, and they started thinking about the ways and means in which the non-product output could be produced. So we will make a note of what we have just learned. So output is the product output and the non-product output. Flow cost accounting uses the material flows and the organizational structure. The organizational structure is nothing but the system and the waste disposal processes. Manufacturing costs are grouped into material, system, and disposal cost. So that is what we saw here. Now, output costs are allocated between the good output and the non-product output. So whatever output costs are there, it is divided between the bad output and the good output. And in flow cost accounting, they consider the non-product output as production inefficiencies. Now, this word is very important. That is, in our example, the normal loss was 10%, right? Because 100 kg into 10% is 10 kg. If you can improve the production process, that is, instead of the normal loss being 10%, if the normal loss is reduced to say 5%, then definitely this non-product output will also reduce, right? Instead of 10 kg, we will have only non-product output of 5 kg, which means that this entire 451 rupees will be reduced in half. See the difference? So that is a logic applied in flow cost accounting. What they are saying is try to improve the production efficiency so that this non-product output can be reduced. Now, how can you improve the production efficiency? You can improve the production efficiency by reducing the quantity of materials. Listen to that once again. You can improve the production efficiency by reducing the materials. Now, in this case, we've got 3 materials. One is the raw materials at 100 kg, one is water at 10 liters, and one is energy or the LPG at 10 kg. If you can reduce any of these materials to produce this 90 kg, just imagine the situation. Instead of using 100 kg, if you can use just 95 kg of raw materials to produce the same quantity of 90 kg, only 5 kg will go as waste, correct? For that, you have to improve the production process. How? by many methods. You can take a new technology, you can monitor the production process and see whether there are any unnecessary wastages. So any method can be adopted to improve the production efficiency. Likewise, to produce 90 kg, we are using LPG worth 500 rupees. If you can reduce the quantity of LPG to produce the same quantity of good output, then again we will have savings in the material cost, right? How can you save LPG for producing the same quantity of good output? I will narrate an incident that happened in my own life. During the early years of my marriage, my LPG cylinder used to be over in 20 days' time. Once my mother-in-law came to my house and she saw that all my vessels were curved because I had a liking for curved vessels. So what was the problem? The majority of the flame was escaping from the sides. So much LPG was being wasted. So what she suggested is change all your utensils to flat bottom utensils so that the entire energy from LPG will be used for heating up the vessel. See, just because of my production inefficiency, that is my inefficiency of using a curved vessel instead of a flat bottom vessel, I was wasting the LPG. So this is the same thing that you can apply in business also. Try to reduce the quantity of materials by monitoring the production process very carefully and looking into whether there are any inefficiencies taking place. So that is a basic aim of flow cost accounting. The non-product output can be reduced by reducing the quantity of materials or by improving the efficiency in production. This is a key thing that you have to remember about flow cost accounting. Now you will get a better picture if you see how material flow cost accounting has been adopted by certain companies. Now for Canon, while manufacturing the cameras, the lens had a lot of normal loss because when the lens was manufactured, a lot of glass used to be cut off from the sides. So before employing flow cost accounting, they did not make any attempt to reduce that normal loss of glass. But after employing flow cost accounting, they saw that the cost associated with that normal loss of glass is very high. So they thought of ways and means of reducing this glass waste. And you know what they did? They reduced the thickness of the lens. So what happened? The glass that used to be cut off as normal loss, that also reduced in thickness. So the quantity of glass waste drastically reduced, and this resulted in a lot of cost savings. Because in flow cost accounting, we know that once you save on the raw materials, then all the other incidental expenses, that is system cost associated with that waste, the waste disposal cost associated with that waste also will reduce. So thereby Canon saved millions. Now let's take a quick look about the difference between the two methods, that is the input-output analysis and the flow cost accounting. Now, input-output analysis deals only with materials, but flow cost accounting deals with the materials plus the organizational structure. We saw two additional columns. One is the system cost and the disposal cost under flow cost accounting. Now, input-output analysis tries to recycle the waste, but under flow cost accounting, it tries to avoid the waste in the first place before recycling. Because what flow cost accounting says is that recycling the waste also requires a lot of energy. So if you could eliminate the waste altogether, then that is a better method. And how do we avoid this waste? By reducing the quantity of materials. And another point of distinction is the total product cost is divided between the good and the bad output in flow cost accounting. But in input-output analysis, the total cost is not divided between the good output and the bad output. Now let's move on to the next EMA technique, activity-based costing. Now you all know that activity-based costing is a superior method of arriving at the cost of a product. What are indirect expenses? In simple words, indirect expenses are not direct expenses. So what are direct expenses? Direct expenses are those expenses which can be directly traced to a particular product. That is, it is exclusively related to that particular product. Example, raw material cost. But indirect expenses are the common expenses that are incurred for a group of products. Example, the factory rent. In the factory, many products might be produced. So the factory rent is an indirect expense because it cannot be directly traced to a particular product. You will have to divide it between all the products. The overheads or the indirect expenses in total used to be divided between the products based on either machine hours or direct labor hours or the quantity produced. That is the overheads in total without making a distinction between whether it is factory rent, whether it is the purchase department salary, whether it is the machinery maintenance. All these used to be clubbed in total, and there was only one basis of dividing the entire overheads, which is not correct. But under activity-based costing, the overheads or the indirect expenses were grouped into cost pools or activities. That is, they break up the overheads based on the nature of expenses. Suppose it is a factory rent. Then the basis on which the factory rent used to be divided between the products was square feet. Or if the overheads were the purchase expenses, then the basis of division was the number of purchase orders. So what activity-based costing used to do is the entire overheads used to be broken down into cost pools based on its nature. And each cost pool had a separate cost driver to divide it. It was not like under traditional costing where the total overheads gets divided between the products based on any one basis, because that's logically not correct. Now, activity-based costing as an EMA technique also applies the very same logic. Costs are divided into cost pools and are allocated to products based on cost drivers. In ABC, environmental costs are divided into two. One is the environment-related costs, and the second one is the environment-driven costs. Now, environment-related costs are costs attributed to a particular cost center. Example, incineration plant. What is an incineration plant? A plant where waste is burned. And sewage treatment plant. What is a sewage treatment plant? A plant which treats the wastewater, which is divided between the products based on suitable cost drivers. So the only thing that you have to understand is you're just extending the concepts of activity-based costing to an environmental setup. So the cost pool is the incineration plant cost. And what is a cost driver? It is a volume of waste generated by each product. And regarding the sewage treatment plant cost, what is a cost driver? It is a volume of wastewater generated by each product. That is the logical basis of dividing these expenses between the products. So that was environment-related cost. Now coming to environment-driven cost. Now these are costs which are hidden in overheads. What do you mean by overheads? Indirect expenses. Example, electricity charges, water, salaries of environmental staff. These have to be taken out of the overheads and divided between the products based on suitable cost drivers. So what is the difference between the environment-related cost and the environment-driven cost? Environment-related cost needn't be taken out from a total cost. The expenses are separately accounted, so it's a fairly straightforward cost pool. But the environment-driven cost is not straightforward. You will have to reclassify. That is, you have to take it out from a total cost and then break it down based on its nature. Here, there is no question of breaking down the incineration plant cost. That is, here the entire incineration plant cost can be divided based on a single cost driver. That is the volume of waste. Now, in order to understand the meaning of environment-driven cost, I'll give you a very simple example. This is an incident that happened to my friend. Once her electricity charges went up so high that she got so worried that she called an electrician to check as to the reason why the electricity charges went up. Now, the electrician checked the entire house, and on inquiring with her, he realized that her air conditioner got spoiled somehow, and she had brought the old air conditioner from her mother's house, which her mother was not using. But the problem was the air conditioner that came from her mother's house was so old that it was not energy efficient. And the second finding was the iron box that she used was 2,500 watts. So he immediately said that for a normal household, 2,500 watts iron box is not required. 1,000 watts iron box is itself required. The only problem is it takes a little time to get heated up. So finally, my friend bought a new air conditioner which was energy efficient, and she changed the 2,500 watt iron box into a 1,000 watt iron box. And the result was that the subsequent electricity bill was very low. So in this example, what did she do? Out of the total electricity bill, she was trying to find out the cause of that electricity charges. So this is the same thing that we have to do in business also. So let's analyze the cost pool and the respective cost drivers in a business scenario. So the first cost pool, electricity charges of machinery. What is the reason for the electricity charges of machinery? It is basically because the machinery is working. So the cost driver is naturally the machine hours. Now coming to the second cost pool, electricity charges of HVAC. What do you mean by HVAC? HVAC stands for heating, ventilation, and air conditioning. So it is basically the air conditioner which cools the factory during summer and the heater which warms up the factory during winter. Now, this capacity of the HVAC is based on the area of the factory, right? So if 2/3 of the area is occupied by the first product and 1/3 of the area is occupied by the second product, so in what ratio should you divide the electricity charges? It's 2:1, right? That is on the basis of the square feet occupied by each product. So that is the cost driver. So the electricity charges of HVAC should be divided between the products based on the square feet occupied by each product. Coming to the next cost pool, water charges. Water charges increases when the quantity of water consumed increases. So that is a cost driver, the volume of water used. And regarding salary of environmental staff. Now what happens is the salaries of environmental staff gets clubbed with other salaries like salary of the factory supervisor, and it used to be divided between the products based on machine hours. But should that be the reason for dividing the environmental staff salary? Suppose the environmental staff is focusing only on one product, which causes the maximum pollution. So the entire salary is attributable to that product only, right? There is no question of dividing between the other products, which is not causing any pollution. So basically the cost driver is the hours that the environmental staff spends on each product. Now, under traditional costing, all these environmental costs used to be divided between products either based on machine hours or the quantity of output. But environmental activity-based costing says you have to take out the environmental cost out of the factory overheads and you should divide it between the products based on logical cost drivers. So what is the advantage? We will get the correct price of that product, that is including its correct share of environmental cost. And then what is the next step? It is not enough if you just sit with that particular cost. Okay, the cost of product A is this much and product B is this much. You should find ways and means of reducing that environmental cost. Suppose you identify the electricity charges of HVAC and you see that the product 1 receives a very high of the electricity charges of HVAC because the square feet occupied by product 1 is really high. So what we can do is we can make either the packing of product 1 or the product 1 itself more compact so that product 1 occupies lesser space in the factory. So what is the advantage? You could make a partition in the factory and the HVAC with a higher capacity could be exchanged for an HVAC with a lower capacity, which consumes lesser energy. So that's the next step. So basically, when you've got the correct cost structure of a product, including its environmental cost, it is easier for us to think of ways and means of reducing such cost. That is a basic advantage of environmental activity-based costing. Now let's move on to the last EMA technique, life cycle costing. Life cycle costing accumulates the product costs, including the environmental cost, over its whole life. So basically, it is totaling the entire cost over the entire life cycle of the product, starting from the research stage till the end of its useful life. The main business of Xerox Limited is manufacturing photocopiers. Now, these photocopiers are leased to the customers and not sold, which means that at the end of the lease, the photocopiers will be returned to Xerox Limited. Now, earlier, these photocopiers used to be packed in cardboard boxes. At the end of the lease, when these are returned to Xerox Limited, again, the used photocopier is packed in another cardboard box and returned. So for each photocopier, 2 cardboard boxes into the waste. So what they did is they shifted to the tote system. Now, what do you mean by tote? Tote is nothing but a case or a bin which is used for transportation. So instead of using the cardboard boxes, the bins that were used were something like this. Now, these totes in which the photocopiers were transported could be used again. When Xerox stocks shifted from the cardboard boxes to the totes, they saved the trees and they made cost savings, which increased their profits. So at times, money does grow on trees. So EMA is the generation and analysis of financial and non-financial information. Now, if you recollect the input-output analysis, there was a quantity and a rupees column. Now, the quantity is the non-financial information and rupees is the financial information. To support internal environmental management processes, focus on the word internal. Now, EMA is the provision of environment-related information internally. That is for internal decision making. That is how to make a particular product more environment friendly and thereby increase our profit also, either by reducing the inputs or by shifting to renewable natural resources. Now, there is something called EA or environmental accounting. Now, environmental accounting is the provision of environment-related information both internally and externally. Now, what are the external reports that are to be given? Now, environmental protection has acquired a lot of importance nowadays, that many reports are to be given to the shareholders, to the government. So in that sense, environmental management accounting is only a subset of environmental accounting because it deals only with giving information internally. And another point is, EMA excludes the external cost. So here you will have to understand the difference between the internal cost and the external cost. First, we will look into the internal cost. These are borne by the company. Example, fines for pollution. Physically, the cash is going out of the company. That is, the company is bearing those expenses. And the second type is the external cost. And these are costs which are borne by the society. Example, the carbon emissions into the atmosphere, the health costs incurred by the society because of pollution. So for this, the company is not bearing any expenses or the company is not paying cash. So such kind of costs are known as external costs. Now, EMA is not concerned with external cost. And the reason is simple, because the external cost, it do not enter the books of accounts and it is unable to quantify. Example, the organization's share to climate change, etc. A particular company is unable to find out what is its share in the environmental degradation. So those are the difficulties concerned with external costs, and hence EMA is not concerned with the external costs. Now we are going to see another method of classifying the environmental cost. The first type is the prevention cost. These are costs to prevent the waste. Example, improved design and employee training. Now, I will give you an example of an improved design. Now, the reason why Coca-Cola changed the green bottle into the clear white is because green bottles cannot be recycled into new bottles because of the additive which gives the green color. So if that is eliminated, then the clear bottle can be recycled. So that is the reason for the shift. So this is an improved design to reduce the wastage. So whatever R&D expenses, whatever machinery has been purchased, all these can be termed as prevention costs. That is, costs which are incurred to prevent the waste. And another example is staff training. Only if the staff is well trained will they be careful enough to avoid the wastage. So always note that these expenses are incurred before the actual production take place so that we can prevent the wastage. Now, the second type of cost is the detection cost. These are costs to detect compliance with environmental policies. Now, these environmental policies may be either because of a legal obligation or the company may be setting standards on its own. So, contamination tests, product inspection are all done to ensure compliance with the environmental policies. Now, the third type of cost are the internal failure costs. Internal failure costs are costs to eliminate waste that are not discharged into the environment. So the production process has been completed and certain waste has been produced. So what all expenses we are incurring to eliminate such kind of waste which are there in the factory premises are known as internal failure cost. Why is it called internal? Because it is within the factory. So example is recycling the scrap. Now the fourth type of cost is the external failure cost. So these are costs to eliminate waste that are discharged into the environment. See, the waste is getting discharged into the environment. It is not within the factory. So what are the examples? Cleanup cost, fines for pollution. Now the third and the final type in which environmental costs are classified are: first is the conventional cost. Conventional cost are the raw material cost, the energy cost, etc. that has environmental relevance. Now, as an example of a raw material, if you're using paper for the packing materials, then many trees have to be cut down. So that is adversely affecting the environment. Energy cost. Now, electricity charges produced from natural resources like coal, natural gas are adversely affecting the environment because of the carbon dioxide emission, and it leads to the depletion of a natural resource. And the second type of cost is the hidden cost. Now, there are many environmental costs that are hidden under overheads. That is, it will be grouped under a head of expense where it is not visible. So these are costs which are hidden under overheads. Example, site studies, the research and development costs, the waste management fees, the training of the environmental staff. Now, most of these expenses gets clubbed with factory overheads. Now, we saw in the ABC technique of environmental costing that many expenses are getting clubbed with other expenses, that it is very difficult to find its environmental impact unless we split all these overheads based on its nature. Now, regarding the R&D cost, now if you're paying salary to a research staff, then that is not adversely affecting the environment. But if you're using electricity charges for the research and development, then that is affecting the environment. So basically the R&D cost gets clubbed into one single pool. So it is very difficult to find out the share of cost that adversely affects the environment. Now, if a site study is being conducted, maybe the groundwater is getting contaminated, waste management fee gets clubbed with factory overheads, training of environmental staff may get clubbed with the training of other staff as well. So we will have to do an ABC analysis to split the environmental cost from the other cost. So that is the meaning of hidden cost. Now, the third type of costs are the contingent costs. These are probable costs of the future. Example, fines or penalties for non-compliance. Now, we saw that the Sprite bottles were converted into the clear white bottles. And why did they do that? Simply because green bottles cannot be recycled into new bottles. Now, everywhere we are hearing about environmental protection, the nations are coming together for discussions. So maybe in the future, if a penalty comes for non-recyclable bottles, then that is a contingent cost. Now, one thing to understand here is, I know that there are standards concerning contingent liabilities. But here we are not concerned about those standards. It is not the disclosure requirements that we are concerned with. We are just trying to keep the company safe. So any probable cost of the future, irrespective of what a standard on contingent liability states, the management accountant has to consider that. It's just a matter of planning ahead. Now, the fourth type of cost are the image or the relationship costs. Cost related to public or shareholder relationship. Example, voluntary expenses like tree planting, cost of the annual environmental report. Even for preparing the annual environmental report, the company is incurring certain costs. So all these are grouped under the image or the relationship costs. Now let's look into the definition of environmental costs. So these are costs incurred to protect the environment. Example, measures taken to prevent pollution. So if you are buying a pollution control equipment, then that is an environmental cost. And it also includes the cost of wasted material, capital, and labor, that is production inefficiencies. Now, we saw in flow cost accounting that non-product output is also known as production inefficiencies. So production inefficiencies causes wastage, and this too adversely affects the environment. That is why any production inefficiency is also termed as an environmental cost. Now, EMA is linked to TQM. What do you mean by TQM? Total Quality Management. Now, basically, TQM tries to provide the best quality product Now, TQM always focuses on continuous improvement. Continuous improvement to get the best product as far as quality is concerned. Their ultimate target is to get 100 out of 100. That is zero spills, zero pollution, zero waste, etc. Basically, efficiency at its maximum. That's their target. So what can you understand from this? Once the quality of the product is top class, that is, there is no further scope of improvement, then there is zero pollution. So we can very safely say that environmental management accounting is a part of TQM. TQM is concerned with the overall quality development of the product. And one of the aspects is to create a product which is environment friendly also. Now, looking into the main advantages and disadvantages of EMA, EMA leads to better costs because we are tracing the environmental cost to the product which is causing the pollution. And because we are aware of the correct cost of the product, it results in fixing better selling prices. There is better environmental cost control also. And regarding the disadvantages, it's definitely time consuming, it is expensive, and we already saw that it ignores all the external costs. That is those costs which are not borne by the company. That's it about EMA. We will have a quick recap before we wind up.